Well, back to the basics. That's what I'll call the market. It's back to the red territory. So we could make that. We couldn't sustain that gain that we had on Friday, but Monday's trading session wasn't red. But let's take a look at intraday numbers for the market. Starting off with Africa, where we see, we saw about a 0.72% decline at the close of Monday's trading session. But at intraday, the market has been able to win back some of the losses because the market had closed at about just slightly below the 98,000 points. But at intraday, it has been able to, although these numbers are still changing, like we always say, 0.37% at intraday for the market. Yesterday, we saw many of the key banking counters, 3 out of the figures, pulling the market in the red, as well as the likes of Boa Cement and Lafarge, which also affected the industrial goods counter. But take a look at the markets here. We see some bargain hunting, which has been able to put the market back in the green. But for the other side of the market, South Africa's JSE 0.11% down at intraday. 80,000 is still the number for that market. On the other side of the market, let's take a look at the Egyptian Stock Exchange, 1.05% at intraday, 29,393.43. While for Kenya's Stock Exchange, for Monday's the close of Monday's trading session, they're slightly behind us. 0.11% is what it ended Monday's trading session. Now, from the equities market, we will be talking about the equities market as well as the fixed income market. But let's delve more into the equities market, and this time talking about bank offers, where we see so far we've seen about 5 banks making their public offers, either hybrid or just one offer, or hybrid meaning rights issue, and then the other being a public offer. Now we've seen the likes of Fidelity Bank, Zenith, GTCO, FCMB, and Access. 2 of them were closed yesterday, which is Fidelity Bank as well as GTCO. They were closed for the 12th. But now we still have some other banks going, which some of them will be ending in a couple of weeks from now and in September. Now let's get a closer perspective on this bank offers, and to give us more details about that, let's bring in analyst for today, Nabila Mohammed, financial market analyst with Chapel Hill Denham. Thank you for joining us, Nabila.
Hi, good afternoon. Thank you for having me, Anita.
Oh. Okay, so now, so it's a return to the public offers market, and especially when it comes to the banks, they do it better, public offers. But so far, how can we compare what we saw in the last 20 years when that banking consolidation prompted the banks to approach the capital market, or the stock exchange to be precise? What can you tell us about this latest public offers from the banks?
So really, we cannot compare the 2005 consolidation exercise or recapitalization exercise to this time, because the capital market has evolved. It is more developed. We have the infusion of the use of digital technology in terms of reaching, as far more people or far more investors that we can have in this particular public offering or rights issue, depending on whatever the bank is trying to do in terms of capital raising. So the scenarios are entirely different. The capital market has evolved so much. And as I mentioned earlier, we have the use of IT now in terms of investors just subscribing at the comfort of their homes, not having to do the traditional method of paper and pen like we previously had in the last exercise. So it is more inclusive, it is more engaging, it is more, investors are more involved this time around relative to what the last exercise was.
Okay, so now let's make a side switch from equities into the fixed income market. The correlation between the fixed income market and the equities market was yesterday we saw the debt management office opening this time the August savings bond auction. Now, what are your expectations? Are investors really whetting their appetite for fixed income instrument, particularly bonds and treasury bills?
So you'd agree with me that this year we have seen that the savings bond rates have reached highest levels, and it's unsurprising given the current realities on ground with regards to interest rates across the fixed income market. So we are seeing that happen, and it's not surprising that yesterday's savings bond auction, the 2-year and 3-year, at record high at 18%. For the 3-year as well. So we are not surprised by that. We would expect that given the realities in terms of interest rates in the market. And of course, it is for retail investors, that's the target market for the savings bond, and they can invest as little as 5,000 naira and enjoy quarterly coupon payments based on the whichever one they invest in, the 2 year or the 3 years. So it is really attractive given the rates that we are seeing it being offered at. That's both the 2 year and the 3 year for the savings bond as it opened yesterday.
Nabila, I think we'll have to leave it there because of time constraints, but we thank you so much for your analysis on the show, and we hope to see you next time.